welcome. I'm here today interviewing Errol Damelin, founder of Wonga.com, the short-term lender. Errol, thanks for joining us.
Real pleasure.
Right, you get quite a bit of flack over the amount of APR that you charge people. What's your APR?
2,686%.
Oh, 2,886%. Ouch. Okay. How can you charge people that much?
Yeah, Alan, we don't charge people that much. Wonga is great value for money. The truth is that the APR is a complete distortion. It misrepresents the prices. It's a price for a product that doesn't exist. If we were doing annual loans, it would be a great measure. And a normalized, it's not. We loaned up to 31 days. The average lending period is about 14 days. So for most people that take a Wonga loan, they pay 1% a day and they'll take 130, 140 pounds for 10 days, pass £1.20 or £1.30 a day, which isn't a huge amount of money.
It's not comparing like for like.
It's just not comparing like to like. And most people end up paying us 13, 14, 15 pounds in fees to have money outstanding for 10 or 15 days to bridge them through a short-term cash flow problem.
But do they pay
and it's great value for money in that situation.
Does the average customer pay back their loan though?
Absolutely.
What's your default rate?
More than the average. The vast majority, less than 10% of customers default, and less than fewer customers of ours than credit card customers default. So we're very precise. We only make money when people pay us back. So we're totally incentivized, and we do the best we can to only lend to people who will be able to pay us back.
Okay, those that don't pay back, short-term loans, controversial subject. In the US, some parts of the US, rolling over the debt is banned. What happens if I don't pay back one of your loans? Are you going to continually roll over my debt so that APR does become more relevant?
No, no. So if you don't pay back your debt, we try we try to remind you, we try and contact you, and we try and work through a repayment schedule. In which case we freeze interest right away and get you onto a repayment plan, and that's our first priority. If we can't get hold of you for whatever reason, we try, and you're non-responsive or whatever. In any case, at 60 days we freeze interest, and we've only added one collections charge up front of £15, which is market leading in terms of its low cost, and we are very gentle about how we do it. We're the good guys in the industry, and the regulators and most of the people who watch this industry love the fact that we're so transparent, and we're really genuinely out there doing the best we can to solve problems in the nicest possible way.
But at the same time, okay, so you're the good guys, but you still raise the amount of money that you lend to a first-time borrower over the past year. So you loaned 2 years ago.
That's because we're the good guys. So we listen to customers. That's one of our innovations in the UK is listening to customers in financial services, which doesn't usually happen. And our customers told us we used to lend people between £50 and £200, and they asked for more flexibility.
But
so
we lowered lending them more money in the middle of a credit card.
We lowered the amount, the minimum, from £50 to £1. So you can borrow actually £1 for a day on Wonga if you wanted to, and we increased it to £400. But that is the amount you can apply for. We then risk score you within seconds, and if the amount we feel like it's not affordable, we'll reduce that back to 200 or 100. Look at the credit crunch. We need companies like Wonga, maybe like Zopa on the peer-to-peer side, other companies who are around the edges really trying to innovate. We're the good guys. We're trying to bring new options to consumers.
Maybe innovation isn't always a good thing though. I mean, if you own, and this is going to sound condescending, but if you own an iPhone, do you really need to borrow 50 quid for 2 weeks? I mean, maybe that's the person that shouldn't be given money. If they're paying 50 quid a month for an iPhone contract, surely they've got a credit card or an overdraft where they're going to spend less money that they can borrow with it. They can borrow that 100 quid from.
Well, it certainly is condescending, because I think that, when you have an iPhone, it doesn't mean that you don't run out of cash from time to time. It doesn't mean that you do run out of cash from time to time. You just happen to like an iPhone as a particular kind of phone. Now, the fact that you can afford £50 may mean that you can afford an occasional black cab. And a black cab you'd use because it was really convenient and really fast, and it got you from place A to place B, maybe late at night, and you knew you'd get there, and you could make a phone call. For whatever reason, you felt it was worthwhile paying £15 to cross the West End, right? Wonga's used in very much the same way. It's a service that's very fast. You could get a bus. No, exactly. So with Wonga, you could potentially get a cheaper solution, but it's available 24 hours a day, money in your account within 15 minutes. It's very convenient, and from time to time, it might be the most appropriate thing and provide great value. In the same way as a black cab. A black cab generally isn't how most people commute to work, but you use it occasionally. Wonga is an occasional product, and we only ever market it that way, and we only ever use it. Was only constructed to be that.
Okay. Oh well, thank you for joining us.
A real pleasure.
So do you think a Wonga loan is an expensive necessity like a black cab? Should people seek a cheaper alternative and take the equivalent of a bus? Or perhaps people should just take a walk to the local Citizens Advice Bureau? Well, let us know what you think using the comment box below.